Thank you, Dr. Tybor. It's a great pleasure to be here. I've decided that bio is entirely too long. It's got to cut it down to 2 or 3 sentences. Even I can't listen to it. It's really a great pleasure to be here, and I thank you for the invitation. And here's the advancer. So let's start with a little bit about our DOE motivations for doing vehicle work. And you've heard a little bit of this already today, but I want to talk about, start with petroleum dependency, because that's really what we're about. A few stats you've already heard, but they bear repeating. First, transportation is responsible for 2/3 of our petroleum usage. And when we say transportation, that's everything from vehicles to shipping to rail to air. Of all that, 80% of it is on-road vehicles. So these are the vehicles you and I drive every day, as well as the trucks that deliver goods and services. And of that vehicle fleet, which numbers more than 240 million vehicles on the road today, let's keep in mind that it takes over 20 years to turn over that fleet. Sales this year probably closer to about 14 million. But by the time you introduce a new vehicle technology, which takes between 15 and 20 years, and then turn over the existing fleet, you're looking at 3 to 4 decades. And so if you don't think we have a petroleum problem today, you have to ask yourself, what about in the next 30 or 40 years? What's the landscape going to look like? And if you think we could have a petroleum or a global warming problem in that time frame, the time to act is now. So let's look at petroleum discovery and production. This global discovery of oil peaked in the 60s. Our own production here in the U.S. of oil peaked in 1971. And as was noted earlier, there has been a recent uptick in that production. Nevertheless, our production this year will be a full 30% less than what it was in 1971. And overall, world oil production has really grown very little, less than 1% a year over the last 6 years. Now, some of that is due to economic downturn. Others is just a tight picture for global production. And then finally, we spend more than $1 billion a day here in the U.S. just for the petroleum that we import. So this is an economic issue. It's about energy security, economic security, and it's about environmental stewardship. So let's not forget that it's more than monetary. Certainly greenhouse gas emissions, as was noted earlier by Dr. Day, he said over 25% of our emissions greenhouse gas emissions are transportation related. My number is almost 1/3. So if there's any physicists in the audience, over 25%, less than 1/3. To an engineer, that's close enough. And then finally, let's not forget their short-term energy consequences, such as the Gulf oil spill that we have to keep in mind. All right, so that was the bad news. The good news is we do have some arrows in the quiver to sort of address this problem. I want to talk about just a couple of the technologies that are under development today. And this conference, of course, addresses electrification. Our own program, of our $329 million budget this year, over half of that budget is devoted solely to vehicle electrification. But there are some other technologies. Let's look at a couple of them. First of all, don't forget engines are improving. When you look at how OEMs are going to meet the shorter-term CAFE requirements, you see a big move towards downsized boosted engines. Those engine systems are getting more efficient. And in the laboratory, we have low-temperature combustion regimes that promise perhaps as much as doubling fuel economy just by improving the internal combustion engine. So this is competition for us, but it's good competition. And we're supporting a lot of that work, by the way, at the Department of Energy. Of course, electric drive, you're gonna talk a lot about that all week. Our own programs in batteries, power electronics, and electric machines support some of the progress there. An important way to address both greenhouse gas emissions and petroleum consumption simultaneously, a highly efficient drivetrain. Lightweighting, this is sort of a technology that improves all vehicles. We think in the fairly short term, in about by 2025, lightweighting of vehicles to the level of about 25% is possible. And we see the emergence of more and more advanced technologies such as lightweight carbon fiber composites. And then let's not forget the fuel cell. Tremendous improvements over the last decade, reducing cost by about 80% while increasing durability in real-world vehicles at least double. So important advances in fuel cell technology. And, I missed there was a slide that got missed, so let me just finish there by saying that even though we're highly focused on automotive technologies, we also have a good amount of work in heavy duty, and a lot of these technologies apply to that heavy duty work. In fact, if you're familiar with our Super Truck program, a major $250 million program sponsored by the Department of Energy over 5 years to increase the fuel economy of Class 8 trucks by 50%. So that's a major push by our program. Now this slide is not probably legible, but it's not really the details that are important. What I really want to impart to you is that we do a lot of analysis at the Department of Energy. We've looked at every type of vehicle drivetrain, fuel combination. This is, literally hundreds of cases. We look at the petroleum consumption of those combinations. We look at the greenhouse gas emissions of those combinations, of those various fuel vehicle combinations. And really the point that I want to make on this slide is directly relevant to electrification in that when you look at technologies that can provide an 80% reduction in oil consumption, and you map those against the technologies that can provide an 80% reduction in greenhouse gas emissions, the ones that can do that, and I've connected them there with the red lines, all involve electric drive. Whether we're talking about a fully battery electric vehicle that's running on renewable electricity or a plug-in hybrid running on low carbon electricity and biofuels or some other type of electric drive vehicle, including a fuel cell vehicle running on renewable hydrogen, the only ones that do both are electric drive vehicles. So this is really the primary reason why the Department of Energy focuses so much attention on electric drive. So the common question that you get is electric drive, what's different this time? This is the fourth run at electric drive that we've had. I'm sure most of you know that in the early 1900s here in the US, about half of the vehicles at one time were electric drive vehicles. Those vehicles essentially lost out to the gasoline powered vehicles. We had another run, a little run at it in the 1970s. And then again in the 1980s with some good entrants, so with the EV1, the Toyota RAV4. And then here we are in 2012 with the Nissan Leaf and the Chevy Volt, to name a couple. And so our answer to what is different this time is really threefold. One, the urgency of energy and environmental challenges that I've already talked about. Two, technology, the battery technology. And three, new U.S. Fuel economy standards, the corporate average fuel economy standards, or CAFE standards as we call them. And so just to talk about that a little bit more, I really believe that we are at a unique time. This is a unique confluence of necessity, the necessity to address these very important public issues of energy security. Technology, the tremendous improvement in technology, and we're going to talk a little bit about batteries. Policy, the policy instruments that are in place, I'll go over that in just a second. And then product availability, meaning, yes, it's great that the Nissan Leaf and the Chevy Volt are out there, but in the next 2 years, we have at least 20 more product offerings scheduled to come on the market. So this is really a unique time. So if I start with the lower right-hand corner, energy and environmental drivers, we've talked about that. Moving upwards, CAFE standards. Most of you know that in the U.S. we have CAFE standards demanding 54.5 miles per gallon in the middle of the next decade. Continued R&D progress. We'll talk about some of that in a minute. I'll focus today on battery technology. Production announcements, we've talked about that. Charging infrastructure. I'm going to talk a little bit about some DOE demonstration activities that are placing over 22,000 chargers across the U.S. But really, I think the story is that the cost of charging technology is coming down. But there are challenges. The business model for public charging is tough. The permitting process still tends to be highly localized and is a little problematic. And but we are seeing some relief there, and we certainly have some programs trying to address that. And the Recovery Act manufacturing facilities is next. I'll talk a little bit more about that. Primarily, I'm talking about the battery production facilities. And then finally, tax incentives. We have a $7,500 tax incentive in place. And I think all of these, technology, necessity, policy, product availability, help to achieve the 1 million vehicles by 2015 goal that the President set last year. But I want to emphasize, it's a bold goal, it's an important goal, but it's really a milestone. What it really does, what we really need to be, is be put on a path where this market share is growing, and that ultimately the 1 million goal, isn't the finish line. It's a milestone on the way to 5 million, on the way to 10 million. After all, we have over 240 million vehicles on the road. So battery cost. It's a big issue. And I think the good news is battery costs have continued to come down. Just a couple of years ago, over $1,000 per kilowatt hour. The last time we measured this was last summer using our detailed peer-reviewed cost model, and at that time we determined we were between $600 and $650 per kilowatt hour. And that number is based on usable energy at production rates of 100,000 units per year. So it is a high volume production number. It doesn't mean you can go out and buy that battery for that cost today. It means if you were to take today's technology and produce it at a high volume, that's what the cost could be, cost to manufacture. And again, the good news is the technologies are in the pipeline, and we see results in the laboratory that lead us to be pretty confident that we'll meet our goal of $300 per kilowatt hour in 2015. And so the question becomes, how far below that $300 per kilowatt hour can you go? We've established a goal for 2020 of $125 per kilowatt hour. And that's a very interesting goal because we've done quite a bit of analysis. It's not clear at all that you can reach that number with lithium-ion technology, so it may be technologies beyond lithium-ion, such as metal air batteries, that get you there. But the short-term good story is that we have anode technology, cathode technology in the laboratory that are doubling the energy density of what we have today, as well as high voltage electrolytes. And so the technology is in the pipeline to get to $300 per kilowatt hour and perhaps below with lithium-ion technology. Talk a little bit about the Recovery Act. The Department of Energy is managing, the Vehicle Technologies Program is managing $2.8 billion in recovery programs, and $2.0 billion of that is solely in manufacturing supporting electric drive. Now that's the federal number. That all those funds are matched by industry, so the total investment is over $4 billion. And the split, at least on the federal fund side, is a $1.5 billion for battery manufacturing and $500 million for electric drive component manufacturing. So under electric drive components, that's everything from capacitors, power electronics, those kind of projects. On the battery side, 20 battery projects spanning the entire value chain of batteries. This is not just about battery assembly or cell production. It's the folks who manufacture anodes or cathodes or electrolytes, separators, or even the cans that these cells go into. So 20 total battery projects. The large battery cell production and battery assembly projects are Johnson Controls, Dow Kokum, LG Chem, GM, Interdel, A123, and Saft America. So some great progress there. The majority of these plants are already open and starting to ramp up production. So good news there, and a great series of events in the last year supported by the highest levels of the administration, President, Vice President, and Cabinet officials opening those facilities. So I want to spend my remaining time talking about some data collection that we're doing. And the primary message here is not the data itself, and most of us being engineers, I could, on any one of the next number of slides, we could sort of dive deeply and start looking at the data and discerning the details and the meaning of it. But that's not really the issue. What I want to do is let you know this data is being collected and that it is available to you to examine and to learn from. And there's really a lot of data. First of all, we're demonstrating over 13,000 vehicles and over 22,000 charging points. Every one of those vehicles and chargers is being monitored and data collected, and I'll show you the kind of data that's being collected. But today I want to talk about just one of those projects, and that's the EV project, which is deploying a little over 8,000 of those vehicles and a total of about 13,000 chargers. And the data that we've received from that already, but also point you to where you can go in the future to get updates on that data. So what are we collecting? First of all, charge event data. Every time these vehicles connect, it's recorded, the charge time, start time, end time, recorded, the average power, the peak power, the rolling power every 15 minutes, and uniquely identified by both the charger, an event ID, and a date and time stamp. Similarly, on driving, every time one of these vehicles is turned on or off, it's noted with a date and time stamp, the vehicle ID, odometer, GPS location, battery state of charge, and fuel consumption. And this is just a mountain of data, and I'm sure some of you would like to get your hands on it. I would like to caution you up front, though, that won't be possible because of confidentiality. As you can imagine, the people driving these vehicles don't want a permanent record of where they've been handed over to the public. So what we've done is, I don't even get that data. That data is in a locked vault, if you will, and most of it's done at the Idaho National Laboratory, a little bit of the work being done at National Renewable Energy Laboratory. But the good news is all the mining of that data and data analysis is available to you. And in addition to that, we're also interested in any way that you would like to see that data cut or parsed. We'd be pleased to talk to you about that and hopefully provide you with what you need. So just to dive a little bit into it, and I'll move very quickly because once again, it's more about the fact that this data is available than what the actual results are. And this is, by the way, just the very beginning. We don't even have a full year yet of all this data. I'm just going to give you the sort of the first report out. This is for the EV project, the locations of where those demonstrations are being done. If you look at the data so far, much of the data is from the West Coast, California, population centers in California, as well as Oregon and Washington. We're now collecting over 1 million miles of data every month, and hundreds of thousands of charging events. Now, the data I'm showing you today is really just through the end of December, but the next quarter data will be out not very long from now. So here are just a few of the kinds of data that we're collecting. Now, I should point out that most of the vehicles in the EV project right now are Nissan Leafs. There is some Chevy Volt data mixed in here, but I think you'll see that the data is kind of skewed because of the numbers of Leafs in the program so far. First of all, average time connected per charge. This is residential charging, over 11 hours, but yet only charging a little over 2 hours, so charging about 20% of the time. So we're noting the power of each charging event, the percent of time connected to the charging unit, and also, of course, in the detailed data, when exactly those charging events happen. Similarly, whoops, I think I went the wrong way there. There we go. Similarly, if you look at this data from a public charging infrastructure standpoint, similar kinds of data. How long on average are people plugging in? In this case, about 7 hours. That tells you a lot of workplace charging is included in this. And even though plugged in 7 hours, less than 2 hours actually charging. The power that's withdrawn in that time and the percentages of times plugged in, just as examples of data that's available. Let's look for a second. This looks down at only Nissan Leaf usage with over 700,000 trips logged and about 5 million miles. Average trip distance, and of course a trip, the way we're identifying it is every time a key's turned on and then turned off. So the average trip distance about 7 miles, and people are using these vehicles about 30 miles per day. They're actually charging less than about once a day, and that makes sense. With a range of as much as 100 miles, you don't need to charge every day. And now here's where it gets a little bit more complicated, and I won't spend a lot of time on this at all. But we've also looked at, in aggregate, where's the power coming from, when is it being drawn, and we have all that information available to you. And so this chart just shows on a per hour basis, every hour of the day, 3 pieces of information. The first is, if you look at the one day in the quarter that the highest amount of power was drawn, that's the yellow line. The top line is if you took on a rolling basis the highest amount of power that was drawn on any one day of the quarter in every 15-minute period and sort of track those throughout, that's a plot of that. And then the bottom line is the minimum amount of power in every 15-minute slice throughout the quarter. So that's an example of the kind of information available, and you can see there's a big uptick that happens right at midnight, and that's really reflects in California the fact that you get some very attractive off-peak rates that kick in right at midnight. Similarly, we have the same kind of data. The last data was for residential charging. Similarly, we had the same information on public chargers, and while the last data showed you most charging was taking place overnight, off-peak, this shows that the public charging, as you would imagine, is taking place in the middle of the day. So just a few summary observations. Leafs going about 30 miles a day and a little over 1 charge per day. That shows you there's some opportunity charging taking place. Most of the charging is level 2 charging is occurring off-peak. A lot of that turns on right at midnight, especially in California. And the EV project vehicles are connected 4 to 5 times longer than they need to recharge. That makes sense. People go home at night, they plug in, they don't unplug till the next morning. And I'll just remind you that total DOE demos are now logging over 1 million miles per month. Let's see. Let me just go back one. Okay. Just a couple other summary observations. First, the charger usage in terms of number of charging events has a huge impact and variation from week to week. And the most important thing on this slide is the 4th bullet down, where you can access all this data. So if you go to that web address, and I don't know if these slides will be available. Will the slides be available? Yeah, so everybody will have these slides, so you can go to this website and get all this data and more. This is a small portion of a much larger database available to you. We are updating this data monthly, and once again are happy to talk to you about any different ways that you'd like to address this data. Thank you so much. It's a pleasure being here today, and have a great conference. Thanks.
Before the break,